As far as SIL is concerned, we are a state-owned entity with 30 years of existence, more than 30 years now. And we have built, obviously, over these last 3 decades, quite a substantial amount of expertise in the field of IT through more than 300 projects which we have delivered in Mauritius in Africa. We have also a large team of IT professionals, more than 100 of them. And through them, we have achieved more than 400 certifications. And this is an essential pillar of our success. Okay. So what do we do? Our areas of expertise. On the left-hand side of the slide, you will see what we do as SIL Solutions, our own value add for government financial management, tax and revenue management, citizen identification, public safety, and a number of other areas where you are able to see. And we also have on the right-hand side the solutions we provide you from our vendors. Okay, so these are not necessarily SIL solutions. These are software, for example, from Microsoft, Oracle, IBM, can be hardware also, which we provide you on a turnkey basis, so that you are able to easily use the solutions within your organizations. Okay. We also have a number of, I would say, flagship solutions we have deployed, which kind of exemplify where we are present right now. So at SIL, we are very present, but maybe you don't know about it, in a number of solutions. For example, at the IPSAS, the MRA solution for tax and revenue collection is a project we have done. There is also, for example, the Civil Status Division, who has our systems, the Electoral Commissioner's Office, the Police Force, the utilities such as CEB. We also have solutions running for the Ministry of Social Services, Register of Companies, and last but not the least, the National Integrated Financial Management System for the government of Mauritius. So in a sense, what we like to say is from birth to retirement or end of activities, be it a physical citizen of Mauritius or a corporate citizen of Mauritius, we are accompanying you end to end during your lifetime. So some of our customers, local and international, mostly in Africa for the international part. Some logos here you will recognize. Some of you are probably also joined today in this session. So let me talk a bit about one specific offering from SIL, which will be the focus of our presentation today, the Tamis Productivity Suite, which is a flagship product of SIL, made up of 3 main areas, domains. One is HR and payroll. We also have CRM, customer relationship management, and we have financials. So this is a set of integrated products we have identified to make the lives of users easily end-to-end, from the front-end operations to the back-end operations where finance and HR step in. So what is Tamis Productivity Suite? It is built on open source. Okay. The HR and CRM platforms are fully developed by SIL. The financials, however, is an open source product which we have forked to provide a localized platform. So basically, SIL is the service provider who is going to customize and support the product. We also have the possibility to have Tamis Productivity Suite as a cloud service or as an on-premise solution. Okay, I see some people are not able to view their slides. Could be a bandwidth problem. Are there many people facing this problem? Can I just have a raise of a hand on this one, please? A few of you, I see. Okay, I'll just launch the PowerPoint again. Okay, just bear with me. Here you go. I've shared the slides again. I hope it's better now. If it is not okay, then what you need to do is leave the session and join again. Okay. So I'll just go to where I left. Yeah. I hope it is okay now. In case it's not okay, just send me a message by chat, or I have my colleagues here who may be able to contact you directly. So as far as productivity suite is concerned, I was just saying that all the support and customizations are done by SIL, and our solution is available on the cloud or on premise. So what are the key benefits of using our solution? It is a platform which allows you to process information fast and accurately. You are also able to have access readily to statements and reports you require for your operations. Our solution is fully compliant to Mauritian laws and practices. This is a very important aspect because a lot of international best practices, for example, are not applied in Mauritius in the same way. There are some specific guidelines which are provided. For example, for IPSAS in particular, the Ministry of Finance has already conducted workshops as how it wants to implement it. The same applies in other domains such as HR as well. So it is very important that you have a solution which is compliant to local laws. We are also compliant as far as confidentiality and security of data is concerned in the design of our solution. As I mentioned, we have a flexible model, cloud or on-prem. And if you're on the cloud, obviously, you will be able to access the system and use it anywhere on the 24/7 basis. Okay. So just if you have our customers who are already using Times Financials, so the solution has already been deployed and being used on a day-to-day basis. Okay. Tamis Financials, in essence, the focus of our session today is a full-fledged ERP. Although, as far as the scope is for IPSAS and public sector accounting, the focus will be more on accounts and the buying components. Although on a case-to-case basis, if there are other requirements, you will see with the other modules we have here, we'll be able to cater for those also. This is a short diagram to explain the project of IPSAS in Mauritius. So, as many of you may be aware, the IPSAS initiative for Mauritius has started since 2017 already, and it is a program which spans over 5 years. So it is aimed to be completed by 2022. Okay. It may not be fully visible in terms of the milestones which are identified in the various phases, but the main thing I have highlighted in the last two phases, what is the target to be achieved by 2021 and 2022. So the main thing here is by the end of the program, all control entities, which means all organizations which are controlled by the state, by the government of Mauritius, are required to consolidate into the national accounts. So to be able to do that, it is very important that you have a system which will allow you to share data for the central accounting system of government. Okay, so it is, in a sense, a tedious task if you have to send consolidation data by Excel, both on the sending end and on the receiving end. Okay, you can imagine the number of entities who are involved here and hundreds of spreadsheets to be consolidated, which is not the ideal way. So what we have done is we have come up with a solution which will allow you, in a sense, to move to a system where you can not only produce your own statements and set of accounting records for IPSAS, but you can also then share them for consolidation purposes with government. So what have we done in IPSAS? We are a bit on both ends. We are at the receiving end with the treasury accounting system, which we have transitioned to IPSAS in 2017. But we now are also seeing how we can help on the sending end in terms of making sure that the controlled entities have access to a tool in case they require it to make the system fully IPSAS compliant at entity level and on a national scale. So after we did the treasury accounting system in 2017, we then also transitioned the Rodrigues Regional Assembly to IPSAS in 2018. Okay. And based on this experience, what we have done, we have kind of translated this experience into a core design, which will facilitate the adoption of IPSAS by public sector organizations. So what does it mean in terms of specifics? We have specific functionalities. Okay. One of them, the core of every accounting system, is the chart of accounts. So our chart of accounts is IPSAS compliant. Then we base ourselves on this chart of accounts to be able to draw some key statements, such as the statement of financial performance, the statement of financial standing, or the cash flow. There are others, just to name a few. We also have a fixed asset register in the system. We cater for the specific revenue and expense recognition mechanisms, including the accrual of these components. Okay. Budget management and the reporting against the votes and against the various accounting categories where you have to report utilization of budget, both for recurrent and capital expenditure. Employee benefits, okay, long-term and short-term. And you can also manage elements such as foreign exchange gain or loss or investment variations in your accounting. Okay, so this is what this morning we will endeavor to show you. And this is what Amina is going to demo just after me. So at this point, if you have any questions, you can just send them by chat and we'll take them during the Q&A session at the end. So for now, I'll just pass on to Amina. Thank you.
Okay, good morning, ladies and gentlemen. and welcome to this presentation. So today I will sorry, this is Lisa. So good morning, ladies and gentlemen. I hope you can all hear me. So today I will guide you through this presentation. Okay, so today I will guide you through this presentation and of the application Tamis Financial, where we will show you how we have aligned the application with the IPSAS. So I'm going to switch to the application. Okay, so basically this would be the landing page of the application once you have logged in. So as you can see in the Tamis Financial, you have several modules: the accounting, selling assets, buying projects. So those are the different modules that we have in the Tamis Financial application. So today we will focus on the accounting side and see how we are aligning the Tamis Financial with IPSAS. So basically, when we're talking about an accounting system, we know that the core is the chart of account structure. So we all know that the chart of account structure is classified by assets, liabilities, income, and expense. So in the system, we have built a chart of accounts. So for company A1, so as you can see, the chart of account is classified by asset, liabilities, equity, income, as well as expenses. So now we need to kind of align our chart of account with IPSAS and in such a way that it is structured and defined accordingly. So if we are talking about IPSAS and we are talking about those companies who receive grants from the government for their operation or for project execution. So we talk about recurrent grants, we talk about capital grants. So your chart of account basically should have these different components and structured in such a way so that eventually when you do your reporting, such as statement of performance, statement of positions, it is reflected in its particular structure. So first of all, let's have a look at the recurrent grant. So basically your recurrent grant would be under the income category. So we define the account government grant in aid. And then this is the account that you will use eventually for the operations of the company. And then next we have the capital grant. So the capital grant is used basically for you to execute a project which can span over 2 or more than 2 years. And then we have the deferred revenue income. So the deferred revenue income basically is when the capital fund will be released for project execution. So this is where you would use the deferred revenue income. And then the capital outlay. So the moment expenses are incurred for the project, this account also will come into the picture. So the capital outlay account. So basically your chart of account, this is the core, as I said, and this is where the structure has to be done accordingly so that eventually your reports come out correctly. Now, once we have taken care of the accounts of the chart of accounts structured properly, so then we can move into the transaction in the application. So we'll start like by the beginning itself. So let's say company received grants from a recurrent grant from the government for the operation. So basically, when you will receive the grants, so we'll see what are the accounting entries which are there. So when you receive the government grant, so basically you're going to debit your government grant in aid, and then you're going to um, credit the bank. So this is when you receive your grant. Now, once you have received the grants for the operation for the year, you have to next create your budget. So the budget feature is available in the system. So the budget is for the company A1. So this is the example we have taken for this presentation. And we have built a budget for the current financial year 2020-2021. So basically the budget in the system, you can do your budgeting against a cost center, or if you have project, you can also do your budgeting against a project. So for this example, we have done a budget against a cost center, which is the finance cost center for the fiscal year 2021. And I have put a few examples here of accounts for which we have budgeted, for example, salary, traveling, compensation, bonus, and passage benefits. Now, there is something which is interesting for you to note is that when we are defining a budget in the system, we have the feature where we can specify at the time we are doing any expense on any expense account, the system will come and check against the budget, so against the annual budget. So the system provides for three options. So you can either stop, the system will stop you if you are exceeding your budget, or it can warn you, or nothing happens. Even if it exceeds the budget, the system will proceed. So this is a feature which is there in the system as far as budgeting is concerned. So we have defined the budget on the cost center of finance. Now, once the budget has been defined, uh, let's say we have the transactions which we have done at the end of the month for payroll, because your budget have been entered on payroll items. So for example, here you can see a journal which has been created for payroll. So you can see the different items, payroll items on the journal, salary, traveling, compensation, allowances on the debit side, and we have bank on the credit side. So basically in the system, you can create this journal manually, or if you have a third-party system on which you are running your payroll, this system can interface with Tamis Financial, where we can bring the accounting entries from the third-party system to Tamis Financial. Or as you know, we have the Tamis HR payroll also. The interface already exists between the HR payroll and the Tamis Financial. So the journal has been created. And now if we go back to the budget, because I want to show you now the budget variance report, which is there in the system. So budget has been created, transaction has been performed, and now we'll have a look at the budget variance report. So again, we will go for the financial year 2021. And for the company A1, so as you can see on the budget variance report, you can see the cost center on which we have created the budget, which is finance, the different account, salary, passage benefits, what was the budgeted amount, what is the actual, and you can see the variance. Also, you can also note that the budget variance report can be displayed over 2 financial years. So in my case, I have put only 1 financial year. But if we had, like, for example, transaction in the previous financial year, here we could have chosen 2019, 2020, and this. So you will see in that case for 1920, there is no figures because there has been no entries done in the previous financial year. So this is for the flow for the recurrent grant that you receive from the government. Now, if we want to have a look, for example, at, let's say, the statement now of financial position. So again, a statement of financial performance, sorry. So we choose the account, we choose the financial year. So here we can see the statement of financial position where you can see the government grant in aid. You can see the amount is here. And we have done some transaction on the compensation of employees account. So you can also see the transaction here. So now what we can do, we can move next. We have finished with the recurrent grant. We will next move to the scenario of capital grant where you have received the grant for project execution. Now, just before we leave, in case, for example, at the end of the financial year regarding the recurrent grant, like, I don't know, maybe some company, they have to return it back to the government. So it's as simple as creating a journal entry to debit the bank and credit the capital, the recurrent grant amount that is remaining at the end of the financial year. So now let's move on to the capital grant scenario. So again, you receive your capital grant for project execution. So we're going to debit the capital grant. We're going to debit the capital grant and credit the bank upon receipt of the capital grant. And then, so once you have received the capital grant, so now you will need to kind of release this fund so that you can execute the project. So to release the fund, you will need to credit your deferred revenue and then you debit your capital grant. So you just saw previously all these accounts were previously defined in your chart of account. So now you have released the fund for you to be able to execute the project. So let's say, for example, upon execution of the project, you have expenses on the project. So we need to create the transaction. Any expenses that we have on the project will need to process on the system. So in this example, we have process and expense transaction on the system. So whereby we have debited the expense and credited the creditor's account. So this is that project execution part which will happen during the year or which will span over several years in case the project goes beyond 1 or 2 years. And parallelly, like at the same time, we need to account for this amount in the capital outlay. So again, here we will need to debit the capital outlay and we will need to credit the expense transaction that we just saw before this one. So at the same time, we need to debit the capital outlay account. Now, if we need to see this on our statement of performance as well as the statement of position, so first we have a look at the statement of performance. Okay, so here, of course, we have the government grant, which was there at the beginning of the presentation. Now, if you have a look at that statement of financial position, so we choose the company, we choose the current financial year. So here we are for the statement of financial position. So as you can see, we have all the assets and liabilities. And here you will see that we have the capital outlay account on the non-current side, non-current asset side, sorry. And then on the liability side, we have the capital grant, which is there also. So all these accounts which have been assigned and structured properly in your chart of account structure will come on your statement of accounts. Similarly, we had the deferred revenue account, which was used to release the fund. So this one will be on your statement of financial performance. Okay, so we choose the current financial year. So here we are for the deferred revenue account. So sorry for this one. So as you can see from the statement of financial performance, we have seen there was an amount on that deferred revenue account. So if I drill down on that deferred revenue account, it brings me to my general ledger where that transaction was. So I can see that this deferred revenue pertains to a transaction which was done on the 31st of July, and the voucher number 141. So if I click on the voucher number, now it brings me down to the level of there was a journal entry that was done for this. So it brings me back to the level of the journal entry. So this is the drill down from your statement of financial performance up to the lowest level of detail of the transaction. So this was for the capital grant flow. At the same time, also we have other transaction, like we have employee benefits. So some companies, they give loans to their staff. So we have the disbursement. Let's say we are giving loan to a staff. So we have the disbursement of loan to a staff, where we're going to debit the loan receivable and credit the bank. And now once this loan has been disbursed, then we have the repayment of the loan which happens, the repayment of the loan from the staff. So when we receive the repayment of loan, it will debit our interest on loan and loan receivable, and debit the interest on loan and loan receivable, sorry. And then we're going to debit the bank. And another benefit also, employee benefit. So most of the companies, they have the passage benefits, which is there. So basically, at the end of every month, the company has to accrue the passage benefit. So we have to debit the passage benefit account, which is an expense account in the chart of account, and we're going to credit the passage benefit kind of fund, which is in the liability. So this is the accrual. This is how you accrue the passage benefit. And then eventually, when a staff will request for passage benefit, so then we're going to debit the expense account and credit the bank. So basically, these are for the benefits that we have. Some of the benefits that we have shown you how it will be processed in the system, and also how it is reflected in your statement of performance. Current financial year. Okay, so here we are. So we have the interest on car loan on the statement of financial performance, and also we have the passage benefit account, which is reflected. Similarly, the passage benefit liability, which is accrued, as well as loan receivable, will be shown in your statement of financial position. Now, basically, this was for the flow for your recurrent grant and capital grant, and showing you also how the transaction are reflected on the statements. So now in the system, I will show you a flow for a procure to pay. So starting with the creation of a purchase order, a purchase receipt, and how whereby you are purchasing an asset. And upon receipt of that asset, the asset will be created automatically in your fixed asset. So we'll start with the purchase order. So let's say we are purchasing a laptop for company 1. Okay. So this is my purchase order. So I'm purchasing from the supplier Apple. I'm purchasing a laptop for 40,000 rupees. And you will see when I'm purchasing that laptop on my purchase order, the account will be the computer equipment asset category account that you would have uh, defined in your chart of accounts. So this is for my purchase order. And one thing I would like to mention here, so on any document that we have in the system, it can be a internal request, it can be a purchase order. So we have what we call the approval hierarchy. So this purchase order, before it can go to the supplier, it is sent to the supplier, we can implement what we call an approval hierarchy. So this purchase order will be created by, let's say, a user in the procurement department. And then based on the policy of that company, so this purchase order will go, let's say, to finance or to the respective head of department. And then eventually it goes to head of procurement or your CU. So this approval hierarchy can be implemented in the system. So we can have 1, 2, 3 level of approval depending on the requirement. Now this is our purchase order, and we can also print it or email it to the supplier. So let's have a look at this purchase order. So this you can either print it or you have the facility also to email it to the supplier. So once the purchase order is done, so now we can create the purchase receipt. So for the company A1, so this is our purchase receipt. So basically the purchase receipt will be created from the purchase order. You don't need to come and key in the purchase receipt again. So you can either create the purchase receipt from the purchase order, or you can, from the purchase receipt screen, you call that purchase order, which brings most of the data that you have on your purchase order. And again, on this purchase receipt screen also we can have approval if need be. So this is my purchase receipt. So my laptop, 40,000 rupees. And now once this is done, okay. So this is the purchase receipt. My supplier is there. This is my item, laptop 40,000. And then once my purchase receipt is done, once this is saved in the system will automatically create the asset in the fixed asset module. So if we go to the asset module now, so if I go on my asset screen, so this is the laptop that has been created. So as you can see, this is the laptop, sorry, the purchase date was the 14th of October, computer equipment, and the amount is 40,000. Now, once it is created in the asset, there are certain information that you will have to come and complete before the asset is complete in the system. So you will have to specify what is the available for you state. And as you can see on this side, we have depreciation information. So this information is picked up on the asset category, which you have defined. For example, we have said that computer equipment has a depreciation method of straight line with that much number of depreciation. So this is picked up automatically from an asset category. And once we save the asset, you will see that the depreciation schedule will be generated automatically. Since this is a monthly depreciation, you can see it has generated the depreciation schedule monthly. And when it comes to the 14th of November, the system will generate a journal automatically where it will debit the expense, depreciation expense, and it will credit the accumulated depreciation. So you don't need to input anything manually in terms of accounting. The system itself will generate the asset automatically. So we have gone through the different scenario for your recurrent grant, your capital grant, and also we wanted to show you this procure to pay cycle where we can create an asset automatically in your register. So as far as the demonstration in the application is, we have, I think we are done. So in case you have any question, we'll be glad to answer.
So you can raise a hand and then we'll unmute you, or you can come on the chat. No, it's not a one day to discuss costs today. We will contact you on a one-to-one basis for these aspects. Yeah, somebody has raised their hand here. Kyo. Yes. Presentation, yes. I think somebody. Yes, presentation will be shared. I see somebody has raised their hand. Mrs. Ramen, I think. So, yeah. Can you unmute Mrs. Ramen, please? Oh. Yes. Fair enough. Yes, you can also use ISR first with the system. There is this possibility also. If you are not using IPSAS, you can also use IFRS IS in the system. I see another question here. So this question is, should fixed asset register budget variance be implemented in the financial statement 22-23? Yes. Based on the phases which I have showed you earlier, if you look at the requirement for end of phase by 2022, yes, you are required to provide the fixed asset register and budget variance in the financial statements, yes. But of course, the authority to confirm this is the Ministry of Finance. Yeah, Mrs. Raman, yes. Yes, Mrs. Raman, if you have a question, you can unmute and then ask your questions. In case you have specific queries, you don't have a time to ask them now, we can get back to you. You can contact us by email. Okay. You have our email normally, and we will respond back to you. Okay. So some of the questions we have here regarding costs, etc., we will get back to you. We will call you and provide you with answers as we go. Yes, yes, definitely. The idea is not to be spreadsheet dependent. Is comment from Mrs. Raman about compilation in Excel, which is daunting. Yes, we will try to remove Excel and give you a robust system which will allow you to produce your statements, have an audit trail for auditing purposes, and also extract information as is required for consolidation purposes. Yeah. Yes, we did look at the payroll today, but we can provide through our payroll suite the reporting for PAYE automatically. The integration with MRA, you mean, and also the returns, we can do that. Yes, yeah, for cost of software, as I said, we will get back to you on a one-to-one basis because the cost varies from organization to organization and how they want to use it. Yes, you can definitely now put up your budget in the system. Yeah. Okay, for the cloud, we take care of everything. We will deploy the application for you on the cloud and give you the service regarding the access, etc. It's going to be a subscription base. So the period for payment then can be monthly or quarterly. So this is how we do it. We set it up for you. We will train you how to use it, and then all the support you require is provided by us. We will take care of the deployment in the cloud. The cloud is going to be public, yes. But when we deploy in the cloud, just remember we will encrypt the connectivity and the database address also for security purposes. Yeah, thank you. Thank you to you all. As we reach towards the end, thank you for a lot of people joining us today. As I said, we remain at your disposal for any further queries you have. You can contact us by email. We will do a follow-up anyway to send you the presentation. A lot of people has requested today. So then we will get back to you and answer to your queries. Thank you again. Thank you again for joining us this morning.